Hello and welcome to the channel. My name is Adam, creator of the Credit Prevail course, which teaches all the proven and up-to-date methods, tips, and strategies for effectively fixing your own credit fast. I'll leave a link in the description for you to check it out. On this channel, I discuss credit repair and credit building strategies that has worked flawlessly for me and my students that you can use today. If you find value in the content being shared, spread the love. Hit that like button, subscribe, and make sure you turn on your bell notification to get alerted as soon as I drop new videos. So let's get into today's topic. So today's topic is, what's better, banks or credit unions? Well, this is a topic I enjoy discussing, and I've come to realize that a lot of people simply don't know the difference between a major bank and a credit union. So when you think of a major bank, think of names like Bank of America, Citibank, Wells Fargo, and Chase Bank. Outside of your majors, you have local community banks and even online banks, not to be confused with online banking, which most banks provide as a service to their customers. These banking institutions are FDIC protected up to $250,000. But what are the differences, and why would one go with this one versus that one? Well, here's a few things you should keep in mind. Based on a major poll done a few years ago, generally only 25% of Americans have enough confidence to keep their money in banks. This is the result of what has happened with some of the major banks in the last 15 years or so. Maybe you recall back in 2016 when Wells Fargo was fined $185 million by the Consumer Financial Protection Bureau for opening up over 3 million fictitious accounts that they were getting paid interest on that no one physically ever opened. Or what about Bank of America in 2009 when they received tens of billions of dollars in bailout money from the government and then turned around the next year and paid over $30 billion in bonuses? So, it's easy to see why a lot of confidence was lost in keeping money in the banks. But here's what I want to touch on. There's always two sides to every story, and what I want to discuss is some of the pros and cons of different banks, and ultimately what a credit union does, and how they perform. So first things first, understand that banks are not non-profit companies. They have an aim and an end goal to generate revenue by charging interest. So basically, banks make money by selling money. So stay with me now. Banks also typically have customers. A credit union, on the other hand, are in many cases non-profit organizations that are actually owned by the members. So with a credit union, each member actually owns a little bit of the bank. Now, let's talk about community banks. This is the type of institution that is, local in your community with several locations, and they are all about helping the local small business owners and individuals out as much as possible. These institutions create jobs for entrepreneurs and help with small loans for startups. That's why they have the label community bank, because they're driven to help out the community and grow it as fast and as safe as possible. Outside of that, you have online banks like Chime, and they are also FDIC protected, but generally have extremely low fees, no ATM or bank withdrawal fees, and generally great interest rates. They're able to do this because they don't have the overhead that a brick and mortar bank has. Finally, we have credit unions. Remember, these are non-profit organizations. Each member owns a small portion of the company. Now, due to this type of non-profit institutional setup, return money goes back into the member's pocket that generate better interest rates, higher savings rates, and just better terms on loans. Credit unions are designed and are driven to serve and protect the community and help entrepreneurs with small business loans and funding needs. They also tend to lend higher limits and than most traditional banks overall. Remember that when you belong to a credit union, you're actually part of the institution. So I covered a little bit about each institution, and now we'll talk about the pros and cons of banks. One of the pros of dealing with a traditional bank is they're great for people who travel abroad or are trying to get a loan. Getting a bank wire, funding from across the world is much easier with a larger national bank. Also, the tech/apps and online services are much better and easier to deal with than with credit unions provide, and the technology are steps ahead. Another Now, you have to weigh your options and figure out what will work best for you and what you ultimately plan on doing. Would it be easier to just do an online bank, open up an account with a local community bank, or go to a major bank like Chase, or just stick with the local credit union that's a nonprofit? Now, me personally, I prefer local credit unions because of the best interest rates, the customer service, the fact that I own a portion of the company, and most importantly for me is they support the local small businesses in the area. That's why I choose credit unions over everything. So to recap, you have different options when you're looking for a bank, and a major bank has some pros that you may feel work better in your situation than a credit union, which with a credit union, you are a member and part owner of the company, just like buying shares of Coca-Cola. You own a part of the company. As a result, you get more favorable terms from credit unions and generally higher limits in regards to loans, credit cards, and etc. All right. So hopefully you found this information useful in your quest to find the perfect institution. Until next time, stay blessed.